Welcome to Professor Academy. This video here is to discuss on the CUET exam for commerce, previous year question papers with solved explanations. Moving ahead. As per the principle of dash, no one can make profit by insuring with multiple insurers. Co-insurance, indemnity, subrogation, and contribution. So this is talking about the principles of insurance, and we have 7 principles. So what are they? Let's see. We have first and foremost principle of utmost good faith, wherein it talks about both the parties should reveal all the material information and facts they have between each other. Principle of indemnity speaks about the insurance contracts are done to provide the protection and to compensate against the losses, damages, and injuries. Principles of insurable interest speaks about the insurance policy holder must have some interest in the subject matter of insurance. Then we have principle of subrogation, which is after paying the compensation, the ownership right of property will transfer from the insured to insurer. Fifth is the principle of loss of minimization. That is to say that how much ever possible, one should ensure that they are minimizing upon the losses. Just because they have an insurance policy doesn't mean that they become careless. Right? Principle of contribution, it talks about insured cannot make profit by insuring the property with more than one insurance company. Okay. And then we have principle of causa proxima, which is it talks about the direct cause or the nearest cause, and it is applicable when there are series of losses, series for the losses or damages that have taken place. So again, reading back the question, as per the principle of dash, no one can make profit by insuring with multiple insurers. The answer would be contribution. Right? So having understood this, the next question will become easier. Which principle of insurance is not applicable to life insurance? Which principle of insurance is not applicable to life insurance? Utmost good faith, of course, it is applicable. Causa proxima, it is applicable. Subrogation, let's think about it. And then we have insurable interest. So one should have insurable interest in the policy. So naturally, the answer is subrogation. Moving ahead, we have matched the following. List A talks about specific sector and list B talks about the regulatory body. So here we see capital market, insurance sector, banking sector, and telecom sector, right? We have on the other side, TRAI, RBI, SEBI, and IRDA. Okay, so if you already know the full forms of these regulatory bodies, it becomes very easy for you to do the match the following. Even if not, just for this information we have here, the regulatory body for capital market, we have the Ministry of Finance, the Securities and Exchange Board of India, and the Reserve Bank of India. They're all the regulatory body for capital market. For insurance sector, the Insurance Regulatory and Development Authority of India, IRDAI. Then we have the banking sector, Reserve Bank of India. Then we have the telecom sector, Telecom Regulatory Authority of India. Okay. So with this, we get the answer that capital market is for SEBI, the option C, right? And then we have insurance sector for IRDA. C is RBI. And D, telecom sector, is for TRAI. Moving ahead, the shared capital of RRB, okay, RRB is Regional Rural Bank, is subscribed by the central government, the state government, and the sponsoring bank in the ratio of 50 is to 25 is to 25, 50 is to 15 is to 35, 40 is to 30 is to 30, 40 is to 40 is to 20. Now, let's understand what is the purpose of RRB, Regional Rural Banks. The idea or the objective is to meet the credit needs of the most underprivileged sections of the society, right? So therefore, this bank advances credit and other facilities to all the marginal farmers, agricultural laborers, artisans, small entrepreneurs, so that they can develop trade, commerce, and industry and other productive activities in different rural areas of the country. Now here, they have an authorized capital of rupees 1 crore and paid up capital of rupees 25 lakh. So how is it subscribed? It is subscribed in the following manner. Central government gives the maximum, which is 50%. The state government is 15%. And the sponsoring commercial bank is 35%. So the answer would be option B. The next question is, which of the following banks is established to support agricultural finance? It is NABARD. NABARD stands for National Bank for Agriculture and Rural Development. We know for sure that SBI, RBI cannot be, Bank of Baroda again cannot be. So it's NABARD, right? National Bank for Agriculture and Rural Development. It's okay if you don't know the exact answer, but if you are able to eliminate, then also you will be able to, the answer will get revealed to us, right? So there are the two ways. One is either you know the answer or by the process of elimination. Okay, moving ahead. Which of the following is not an asset of commercial banks? Bills of exchange, demand deposit, cash reserve with RBI, money lent to customers. Now we know one thing, that one of the main revenue for bank is to lend them money. So definitely that would be an asset. Cash reserve with RBI, it's a cash reserve, so it's liquid form. Again, it is an asset. Bills of exchange, it is what? It is similar to check or promissory notes, and it is known as near money as well, meaning it is a liquid asset, right? So therefore, the answer would be demand deposits. Why? Because it is demand deposit. Demand deposit allows funds to be withdrawn at any time from the financial institution, and it is reported as current liabilities. Moving ahead, which of the following is not an asset of commercial bank? That is, we saw the answer as demand deposit. Then we have, which of the following is the asset function of money? Okay, so asset function, unit of account, medium of exchange, standard of deferred payment, store of value. Store of value would be the answer, because it's an asset function of money, right? You can actually store the money, and it doesn't decay, or it doesn't go out of value, right? Then we have, in order to increase money supply in the economy, bank rate and CRR should be increased. Bank rate should increase and CRR should decrease. Bank rate should decrease and CRR should increase. Both bank rate and CRR should be decreased, right? Cash reserve ratio, what is it? It is the reserve, it's a cash reserve which RBI mandates every bank to have. So naturally, if that is less and the bank rate is less, there would be increased money supply in the economy. Moving ahead, we have, which of the following functions are involved under marketing management's functions? Collection of marketing, yes. Marketing coordination, yes. Marketing controlling, yes. Marketing planning, yes. And marketing evaluation also is a function of marketing management. Therefore, the answer would be option D, which is A, B, C, D, E. All right. Moving ahead, we have rising promotion costs and shrinking profit margins are the results of which of the following? Read it again. Rising promotion cost. Okay, your promotion cost is increased. Okay, and shrinking profit margins. They are the result of which of the following? Globalization, deregulation, heightened competition, changing technology. Globalization, you can't have shrinking profit. Deregulation, what do you mean by deregulation? It means the removal of laws. Okay, that also cannot have shrinking profit. Okay, then we have changing technology. Again, in changing technology, promotion cost may not increase, but shrinking profit, definitely it's not possible. So the answer would be heightened competition. When there is a lot of competition, you start promoting your product more, like you start advertising more, you start doing sales promotions better, right? And there are also chances when the profit will shrink, provided we have a very tough competition. Moving ahead, we have marketing is a human activity directed at satisfying needs and wants through exchange processes. It is said by whom? Okay, so one thing that you should know is that the father of marketing is Philip Kotler, right? So when you have him as one of the options, of course, these kind of questions, one is just a guesswork. But I'm saying, even if you're doing a guesswork, you should do it with some sort of a logic. So the answer here is Philip Kotler, right? He is the one who speaks about it. There are some times when there are philosophies also asked. So that is a time which you should be aware, like scientific management philosophy. You have the Fayol principles philosophy. So they had a very different opinion of altogether of how the organization functions. So in such questions, you should apply logic. But in these kind of questions, it's either it's just a what do you call it? You just have to do unless you're very thorough of the definition, you just have to go for one option, right? So there, the answer here would be Philip Kotler. Then we have match list, again, match the following. In this particular paper, we realize that there are a lot of match the followings, right? It's a 2022 paper. Okay. 1 minute. Okay, what is shrinking profit? Shrinking profit is when your profit decreases. I mean, when your profit shrinks, basically. Let's say that even though you are promoting your product too much, your profit margins are very, very less. Okay, that is what is shrinking profit. Okay, so your profit is shrinking. Okay, shrinking. Right. Then moving ahead, we have match the following. So P's, all the 4 P's of the market and the elements. Okay, a pretty easy one. Product is dependent on the warranty. Price is on credit facility. Promotion is one of the elements of personal selling, and place is factory location. So here the answer would be option A. Sorry for this inconvenience. Moving ahead, we have advertising does not appear to be important in brand image, highlighting specific feature, information, all of these. So if you read the question, there is something wrong, right? So this question, there's a little mistake. The question should have been advertising does appear to be important in. Okay, it's a mistake by the question itself. So the answer here would be all of these. Okay, advertising does appear to be important for brand image, for highlighting specific feature, and for information. Okay, right. Then customers buy from stores and firms that offer the highest dash. Okay, company image, no. Value for the money, no. Level of customer satisfaction, not really. What matters is the customer's perceived value, right? Customers are buying from stores and the firms that offer the highest customer perceived value. Okay, so that is where the answer would be option C. Moving ahead, promotion mix is the particular combination of promotional tools used by a company to. So when you talk about promotion mix, what are we talking about? We're talking about advertising majorly. We're talking about personal selling. We're talking about sales promotion. We're talking about all the discounts that come in. We talk about all the sale that comes in, right? So what is it? What does it do? It helps the audience communicate about the particular product, right? Therefore, here the answer would be communicate. Okay. Right. Then we have in a perfectly competitive market, a firm to be in equilibrium in the long run achieves normal profit only when. Okay. So before I explain about these things, okay, in business economics, this the price, I mean, all the curves that you have, okay, all the all the types of the market that you have perfect competitor, you have perfect market, you have monopoly, you have monopolistic. Okay, read them in and out. Okay, it'll be very, very important concepts. You will surely get a question from them, right? Yeah. So coming back to this question, in a perfectly competitive market, a firm to be in equilibrium in the long run achieves normal profit only when average cost and average revenue will be equal, marginal cost and marginal revenue will be equal, average variable cost and marginal revenue will be equal, or AC is equal to IMC is equal to AR is equal to MR are all equal. Okay, so here there are 3 concepts which this covers. Number one, and first and foremost, it is a perfect competition. It's in perfect competition. Price is determined by the market forces, right? Second is firms will be in equilibrium under 2 conditions. The first condition is MC is equal to MR, and second is MC should cut MR from below. That's the second condition, right? Now, AR means price. Why am I saying average revenue is equal to price? Average revenue is equal to total revenue divided by quantity, right? How do you get total revenue? Price into quantity. So price into quantity by quantity, you do the simple calculation, you get AR is equal to price, right? So now normal profit is generally we get in the long run. Super normal profit and economic profit and all is generally in the short term. Because normal profit is equal to AR is equal to AC, and marginal revenue is equal to marginal cost. So again, here also, when you see this diagram, you will understand. I'm just giving it a pause for a second so that you understand that, yes, MC is cutting AC from below, right? And all the conditions that was said is fulfilled. So here the answer would be D, right? When MC is equal to AR is equal to MR, all are equal, okay, under the normal profit. Then we have match list 1 with list 2. So here again, the tool of the theory, demand analysis, cost and product analysis, capital management, and profit management. So, demand analysis talks about the demand forecasting. Cost and product analysis talks about the cost output relationship. Capital management talks about profit policies, right? And profit management talks about the price estimates. Answer here would be option D. A is 1, B is 2, C is 4, and D is 3. Moving ahead, under price discrimination. See, again, price discrimination, a very, very important concept. Price would be higher in the market where the demand is. The moment you see price discrimination, which market would you would it's talking about? It's talking about the monopoly market, right? It's talking about the monopoly market because only in that market price discrimination is possible. Again, like for example, the flight fares. Okay, the fare of the flight, the ticket, right? It's separate for business class. It's separate for economic class. Right? So it's a price discrimination, right? So now price will be higher in the market where the demand is highly elastic, unitary elastic, less elastic, none of these. Talking about the property of monopoly market, are there substitutes? Are there close substitutes? No, there are no close substitutes. Therefore, the demand would be less elastic, right? Yeah, so here is the explanation for the same. Elasticity of demand and price discrimination, both of them together was asked in this question. Okay, you can even see this image and that will help you understand that when the price, just see the third one, low elastic, right? The responsiveness for the change in price is resulting in what kind of quantity demanded, right? So therefore, the answer would be less elastic, option C. Then, which of the following is a method for measuring elasticity of demand when change in price of a commodity is substantial? When I say substantial, I mean when the price of commodity makes a lot of difference, right? So point method, percentage method, arc method, none of these. Now, let's understand what are the methods of measuring elasticity of demand. Okay. The percentage method, it talks about the percentage change in the quantity of a commodity demanded resulting from a given percentage change in price. It's talking about the percentage change. We have the point method, which is talking about the geometrical method, okay, of measuring the elasticity at a point. Then we have the arc method, which is a measure of the average responsiveness to price change exhibited by a demand curve. Then we have the total outlay method. Here it talks about the total expenditure, right? By comparing the total expenditure of purchaser both before and after the change in price, it can be known whether its demand for a good is elastic, unity, or less elastic. So the answer would be arc method, right? Arc method. Here, moving ahead, we have if marginal cost is above average variable cost at a time when output is also rising. Okay, marginal cost is above the average variable cost at a time when output is also rising. Then option A, average variable cost is falling, average variable cost is rising, average total cost is falling, and none of these. Look at the diagram and you will understand this graph, right? What does the question talk about? When marginal cost is above average variable cost. Okay, marginal cost is above average variable cost at a time when average variable cost is also, when the output is also rising, then average variable cost will rise. Okay, as you can see over here, this part. Okay, it's talking about the same, and ABC is rising, right? Okay, then moving ahead, we have again, match the following has come: methods of quantitative economics and tools and techniques. Okay, so inventory control. Okay, inventory control, LPP, game theory, inventory evaluation. Okay, so let's say I know for sure that game theory is talking about saddle point. Okay, which is C to 2. So if I have to C for that, C for 2 is just one option here, which is B. Right? Yeah. So I would go for option B. Okay, because as I said, we may or may not know the right answer always. So this is another way in which you can solve the question, right? Or let's say I might just know that LPP is talking about the simplex method, right? Linear graphs that we have learned in our schools, right? So simplex method is one of the ways. Okay, so go for it. Okay, go for B1. But again, be careful. B1, there are two options, A and B. So you need to know one more thing, which has got some point of differentiation. Okay, right. Moving ahead, the EOQ of an item is calculated using the annual demand together with dash and dash. Okay, so EOQ, please be careful that here they're using all the short forms as and when possible. So one needs to know what is the full form of the same. Okay, economic order quantity. Economic order quantity. So when you see this itself, you should understand that what is the purpose of economic order quantity. It is the ideal quantity of a unit a company should purchase so that they meet the demand while minimizing the inventory cost. Okay, what are the inventory costs, holding cost, storage cost, and order cost? So talking about the formula is given right here in the image, right? Going back to the question, it's talking about the ordering cost and holding cost. Okay, right. Then we have our next question. Which of the following are true in the context to company law? Okay, in case of transfer of shares, stamp duty is essential. For transmission of shares, no consideration is necessary. A person cannot be directory of more than 30 companies at the same time. IPO stands for initial public obligation. Departmental undertaking is a type of government undertaking. Now here, let's say I do not know company law. How, or maybe I have not studied this part of company law. How will I solve this problem? Okay, very simple. IPO, we know, initial public offer, right? So we know for sure that which of the following is true. So we know that D is not true. Okay, so if we just simply eliminate, I can eliminate option A and I can eliminate option D, right? Because it's not all of these for sure. It's not A also. So now I'll be confused between B and C. Now in B and C also, there are already A option, there's already B option. Now C and E is what I need to confirm. So a person cannot be directory of more than 30 companies at the same time. I'm not sure about it. But I definitely know that department undertaking is a type of governmental undertaking, right? It is definitely a type of government undertaking, right? So I know that option C and option D are false, right? So therefore, my right answer would be option C. Okay. So now let's also understand what is the law. What does the law talk about? It talks about that under section 165 of Companies Act, one person cannot hold the directorship in more than 20 companies. Okay, 20 companies. And also out of that 20 companies, he or she cannot be director in more than 10 public companies. Okay, so out of the 20, you cannot be the director of more than 10 public companies. IPO, initial public offer. Okay, right. Moving ahead, match the following, match list 1 with list 2. We have all the serial number of clause and we have title in MOA. MOA stands for Memorandum of Association. So again, here we need to kind of by heart on what is when. Okay, we need to see the clauses. What are seven important clauses? Name clause, registered office clause, object clause, liability clause, capital clause, association clause, and nominee clause. That is only the case of one person company. Okay, so name clause, registered office, object clause, liability clause, capital clause, and association clause. So considering this, we have the right answer as option B. Okay, option B. Right. Now we move on further. Staffing includes, okay, staffing includes training, appraisal, placement, and directing. So if you see the functions, right? Function of staffing definitely includes training, it includes appraisal, and it includes placement. But does it include directing? No, it does not include directing. So here the option would be option C. Okay, training, appraisal, and placement. Right. We have the next question. An organization structure is effective if it enables individuals to contribute to the objectives of the enterprise. An organization structure is effective if it enables individuals to contribute to the objectives of the enterprise. Okay. Now this is known as scalar principle, principle of functional definition, principle of unity of objectives. None of these. We know none of these. I mean, it may or may not be the answer for now. Scalar principle cannot be the answer. Why? Because scalar principle talks about the it helps you understand the position that you hold in the company, meaning it talks about your hierarchy of the organization, right? Therefore, that is what scalar principle talks about. Scalar principle, yet again, is an important topic. you may, it's a pretty important topic as such. So you should be very clear of the scalar chain. Okay, coming to this answer, an organization structure is effective if it enables individuals to contribute to the objectives of the enterprise. Okay, principle of unity of objectives. That is what talks about how one should, there should be a unity of objectives, but both by the individuals and by the organization. Okay, right. So this is option C is the answer. Okay. Then we have given below are two statements. One is assertion and another is reasoning. Okay. So whenever you have assertion reasoning questions, okay, take the statements individually and analyze them first. Okay. That is the way you go forward for assertion and reasoning questions, right? So first you take up assertion. See, assertion means what? It's a particular statement, and reason tells you why about it. Okay, like why is so and so. Okay, so why answer is reasoning. Therefore, take the assertion first, understand if that is what it talks about, then go ahead for reasoning. Okay, right. According to Taylor, one best way of doing each task leads to increase in productivity in the organization. Okay, we know that there's one best way of doing. Okay, then it was the management responsibility alone to find out the one best way. Is it true? Is it true if it's not the management responsibility to find out only the one best way, right? Therefore, A is correct and R is incorrect. Okay, so that's about the previous question. Moving ahead, we have the theories of leadership. Again, theories of leadership it's a pretty important concept. Do read through them. I know, I understand that CUET, when I read through the syllabus, it's a very, very, very vast syllabus. Okay, but there are these important concepts which generally is asked in the exam. So whatever I understand from going through your previous year question papers, my thing would be that do read theories of leadership properly, theories of leadership, theories of motivation, right? All of these are pretty important, and they're very simple also. It's very simple. You just have to understand what is what, right? Moving ahead, the follower theory talks about, the follower theory is leader is a leader, right? The behavioral theory talks about the personality, right? The great man theory is talking about, the character of leader theory, and the trial theory talks about the effective leader. Okay? Therefore, the answer would be option C. Okay, A is 3, B is 4, C is 2, D is 1. Okay. Right. Then we have match list. Again, we have matched the following elements of the broad category versus the broad category. So grapevine. Grapevine is grapevine, it's an informal conversation, right? It's an informal communication. So therefore, grapevine is form of communication. Unity of direction talks about the management principle. Time and motion study, we know it is scientific management. And budget is a tool of control. Only when you have budget, when you have the budget sheet, etc., there will be a controlling. It's one of the controlling technique. It's one of the tools of controlling, right? So A3, B4, C2, and D1. We have the right answer as option B. Okay. Right. Then we move ahead. Again, here also we have assertion reasoning. The neglect of the human side of the organization has been one of the major criticism of Taylorism. So if you know the scientific technique of Taylor by Taylor, what has he done? He's been very a person with a very machine minded kind of a thing, that okay, you need to produce so much thing only if you do it. He was the one who came up with this hours of working and then this extra wage if you work overtime, etc., etc. So he never really kept the human side in his mind, right? So therefore, assertion is definitely correct. The neglect of human side of the organization has been one of the major criticism of Taylorism. Absolutely right. Now, reason. Taylor and his followers had viewed organization mechanistically. Okay. Yes, that's the reason, right? That's the reason why, because he viewed organization mechanistically. That is why he never thought about humans. He never really thought that humans also need rest. He never thought that human also needs some motivation. right? For him, it was all about just the production that comes out, right? Okay. So here both A and R are true, and R is the correct explanation of A. Right? Sole proprietorship is most suitable for when you're sole proprietor, right? It's always easier to have when you have a small scale concern, right? When you have a small scale firm, it becomes way too easier. Because why? Because if it was any problem, if at all there's any this thing, you can easily exit the market. And even otherwise, it's very easy to manage, right? Because it's a large scale concern, sole proprietor, very difficult. Medium scale may not be able to do it. You will not be able to expand, right? Then we have, it's the most suitable. The question is, it's the most suitable for small scale concern, right? Then we have matrix organization. Matrix organization refers to a term of organization where authority and responsibility coexist. Organization in which two or more basic types of departmentation are combined. Organization where events are mathematically arranged in columns and rows, and none of these, right? So matrix organization, this is how it looks. Okay, it describes a business with multiple managerial accountability and responsibility, right? And you see that how different departments are also interconnected, right? So therefore, the right answer would be organization in which two or more basic types of departmentation are combined. Okay. Then we have organization theory deals with dash. Organization theory, right? When it's an organization, obviously it'll be related, it deals with the structure of an organization. Okay. Then the Sale of Goods Act was enacted on, it's a very theoretical question. 15, and I mean the dates are quite this thing. The right answer is 15th March 1930. Please note here the question is enacted on. Okay, had the question been when was it existent? Okay, when did it come to existence? The answer would have been 1st July 1930. Okay, 1st July 1930 for as the date of existence. Sale of Goods Act was enacted on 15th March 1930. Yeah. All right. Section 28 to 44D of the Income Tax Act 1961 is related to. Okay, again here the answer would be PGBP, which is profits and gains from business or profession. Okay, so wishing you all the very best for your upcoming exam. And we for further updates, please do subscribe to this channel and also join the Telegram group. We have the link mentioned in the description box. Yeah. Thank you very much. And again, wishing you all the very best. You have any questions, you can just put it up in the YouTube chat box. Are there any questions on the YouTube? Okay, no questions as of now. Fine. All right. Thank you very much. Yeah, all the very best.